So the market's heading down consistently so far last month, and it looks like March is no different. It's going to continue. So in this bear market, we're going to be looking to really concentrate on positions I have really high conviction in. So I've completely sold out of 2 positions, those being Alimentation Couche-Tard, and I've also sold out of Canadian Apartment REIT, and I'll be going into what I purchased instead. There's nothing wrong with these 2 companies, of course. It's just I have more conviction in other stocks, and I'm going to be telling and explaining in this video where I put that money to work, and just some updates on my positions. So with that said, let's cue the intro. So in the past day, we're down 59.69, or about 0%. In the last week, we're up $31.56. For the 1 month, we're down $112.44. For the past 3 months, we're up 2%, or $181.97. And then for the 1 year, we're up $838.77, or about 7%. And all time, basically the same. So we've definitely lost our, peak of our gains, but that's okay. The market's been heading down consistently, so it's the entire market. It's not really our positions that we're picking necessarily. Just nothing you can do. Just got to keep buying shares and buying into good companies as the prices go down. So we can see that even big companies like Apple are not doing too hot, but they're still up for us, so not worried there. Algonquin Power actually had a pretty good rally. It was in the 17s, and that's a little bit over 18. Alibaba's earnings were not amazing. They definitely experienced slower growth in China, about 7%, but it looks like their international growth and their cloud business grew in the 20% range. So the China growth slowing down doesn't really surprise me, because the Chinese economy is slowing down. I think they only had 4% growth overall, so Alibaba increasing Chinese profits, or Chinese based revenue, by 7% is not bad. And I'm not going to punish this company for having slower growth, because they are in China. So however the Chinese economy does, if it does good, it'll benefit Alibaba. If the Chinese economy does poorly, it will have a negative effect on the company. So that's something to keep in mind if you're going to have any foreign investments in like the States or other countries like China or in Europe. The economic conditions can definitely impact the stock price and the performance of the company overall. But a good business will make it through anything, even a recession or slowing economy. A good business should still be able to grow, or at least not decline. And Brookfield Asset Management is one of the companies that I bought into, so we bought another share of this. So we went from 5 to 6. With Scotiabank, I bought one more share. So this was from the sales of Alimentation Couche-Tard, and they had actually excellent earnings. They had especially strong growth in their international markets. Very impressive that their international investments are paying off, especially their international loans. So because this bank is invested in the Latin Americas, so other countries that the other Canadian banks aren't really focused on, I really like this bank in general. So great earnings report from them. Very, very happy with those results. And we also purchased a little bit more HYLD, so we went up to 15 shares of this, so we're just going to get more income from this. This is our 10% monthly yield. We should be getting our first one from this. So this fund actually just opened last month, so this month is going to be the first actual dividend payment. So you can watch the video that I posted about this fund that goes into a little bit more detail about it. and you can just click on the annotation above on the top right and just watch that video if you want to know more about this one. I also bought more Intel, so I went from 11 shares all the way up to 12. I just really like it at these levels, and I decided to buy one more with the money that I had. And they actually stole another chip designer from AMD, so you know, Intel's definitely doing what I expect them to do to grow the business. So they took away the chip designer of the M1 chip from Apple. They're taking away a chip designer from AMD. It looks like they're just getting a very talented roster of engineers. Again, very good sign. And I even see in their financial statements that, you know, they're increasing spend on R&D, they're increasing spend on mergers and acquisitions. They bought Tower Semiconductor recently, so that's a good acquisition for them to make larger nodes. So Intel is definitely going in the direction that I saw them go into. You know, just going into the chip making business, really going for talent, really not holding anything back on research and development to make the best, most competitive products that they can. This is not an Intel that I've seen in the past 10 years. So this is really nice to see them finally show up and produce excellent products with the 12th generation processors dominating on both desktops and laptops. So hopefully they can keep that up. And I bought one more share of Loblaws. I just think this is a very well-priced business. I do believe it's undervalued, at least from the calculations I've done. I've even compared them to Metro and Empire, so you can refer to my previous video for that. So the link is just going to be above, and you can give that a watch. And I just break down why I picked Loblaws over the other two. And I purchased 2 more shares of POW. So this is the Power Corp of Canada. So they own Wealthsimple, they own Great-West Life, they own Lion Electric. They also own a lot of other insurance businesses and asset management businesses. And I haven't seen the price on this stock drop for a while. Like, it's been sitting in the 40 range. So because it dropped to, you know, below $40 a share, it's now offering like over a 5% yield, and they grow that dividend every single year, and that's just great. And just to see this finally come down, I'm going to take the opportunity to buy more shares of this company while it's down, and I really like it. Their earnings are going to be later this month, so we'll see how they did. And Smart Center is doing great, Suncor doing great, unsurprisingly, just due to the Russia-Ukraine war. You know, since Russia has about 40% of the European oil supply, there's definitely going to be a need for other countries' oil to make up for that. So this is doing well. TELUS has been doing fantastic this entire time. So again, just like Power Corp of Canada, if this drops or starts to decline, I'm going to be really interested in acquiring as many shares as I can and building this position, just because of, you know, their steady, consistent growth. They're diversified in a lot of trending industries that have very, very bright futures ahead of them, like the agriculture, healthcare, things like that. Power Corp is doing, you know, fintech with Wealthsimple, and they're doing like electric vehicles with Lion Electric. Who knows what they'll do next? So they're doing fantastic. TELUS, similar. They give good service, and they don't bleed as many customers as Rogers and Bell, just due to their better customer service. So retaining customers is very good because it's very expensive to get new customers. And I really went heavy on TD. So they just recently announced that they bought a U.S. bank called First Horizons, and it's about a $13 billion deal. And this essentially will make TD Bank the sixth largest bank in the United States. So they're already the second largest bank in Canada. They're going to be the 6th largest bank in the United States. This is fantastic. I'm so bullish on this company right now. And I decided to buy 3 more shares of this company. And that's why I sold out of those other positions, just because I know that I'm interested in the banks, and the prices of the banks have all declined recently. So I'm going to take this opportunity to get in. I think that it's a fair price. It could drop lower than this, of course, than 98, but I was very happy to get more shares of this great bank, and the fact that they finally made an acquisition. Like, we've been waiting quite a while for this since BMO made their large acquisition. Now TD is gonna accelerate their US growth. They're gonna announce earnings later on the 3rd, I believe, so we'll see how well they did, but them buying this US bank has made me very, very excited for TD in the future. And for the dividend growth, we've just increased our monthly average with those sales. So because we sold out of lower yielding investments of ATD and CapREIT and put more into Power Corp, the Canadian banks, our monthly income right now is $52.25. So, we've pretty good increase over last week. I think last week we were about, 50 or 51. So getting closer to our $2 a day goal. And on the daily, we're making $1.72. We're getting very, very close to this. So we're just going to keep depositing more money, reinvesting our dividends, and just taking it one step at a time. And every time we hit a goal, I'm going to make another one. So I'm always going to stay motivated and keep investing. So please like, comment, and subscribe to the channel if you enjoyed the video. We're very close to hitting 300 subscribers on the channel, so if you could subscribe, I'd really appreciate that. And leave a comment in the description. What are you buying during this market decline? Are you holding cash? What's your strategy? All right, have a great day. And I use Wealthsimple to buy and sell all my stocks. So you can buy and sell Canadian listed stocks and ETFs with 0 commission fees. So if you want to sign up for Wealthsimple, you can use my link in the description and you can get the value of a free stock valued up to $4,500. Link in the description below.